So we're recording, we're Facebook Live. Welcome everybody. I am Amy Loudermilk, the program manager for Arts Build. And today you're joining us during one of our shared services workshops that we have moved those to Wednesdays now. So we are workshops on Wednesdays. We've got Lynn Talbot here with HR Biz Solutions. But before we get started with Lynn, just a couple of announcements that I'll mention here at the end as well. We've got some important dates that I'll be emailing out to our shared services list shortly after our workshop today is complete. So we've got some mental health first aid trainings that are available, and it would be great if we had a great showing of our arts community. Take advantage of these trainings. The dates are May 22nd, June 5th, and June 19th. So I'm working on getting registration information together for you for that email. So if you've got any questions in the meantime, feel free to email me at amy@artsbuild.com. And that's being put on by CHI Memorial. And then next week, same time, same place, different lady. We'll hear from Colleen Miller next Wednesday for our workshops on Wednesday. She'll be giving us a guided digital tactics and content conversation. Also, if you've got any kiddos out there who are needing some summer programming, we just released information that we are accepting applications for our high school version of Tech Goes Home with the Arts. That's going to take place June 7th through the 11th from 12 to 3, because I know those kiddos are sleeping late after school's out. And there's one more thing, make sure that yeah, I think that's all I've got so far. But with that, I will let Miss Lynn take it away, because I know she's got a ton of information that she wants to cover with everybody.
We always have a lot to do in these sessions, but if anybody has a question, wants to put it in the chat, that'll be great. If Amy can monitor the chat, that'll be great. Or since right now there's just the three of us, you can always unmute and ask if I go through something, because this is going to be a little bit interactive. So Catherine, if you can tell me a little bit about where you're from and your bookkeeping needs, that would help me out a lot. Can you unmute? There.
Happy to, Lynn. Thank you so much. So I'm a very small 501c3 arts organization, and Quicken's never really done it for me. So I'm actually moving everything over to NetSuite. And so I'm really looking forward to hearing how you're laying out the chart of accounts, especially for nonprofits.
Well, yeah, so today, and we're going to work inside a QuickBooks Online file today for everybody, and that's what the QuickBooks Online nonprofit version, you can get that for just $75 a year. So it's a lot cheaper than a NetSuite. And so maybe some things we have here you can take over to your NetSuites as well. But yeah, if you've been keeping it on Quicken, it would be better to have QuickBooks Online. And the QuickBooks Online nonprofit is great. And you're always welcome to message me or email me, and I'll tell you how to get that inexpensive version of QuickBooks PBO if you're interested. So and Kendra just joined us, and Kendra, I'm just asking folks to tell me a little bit about where you're from, which nonprofit, and a little bit about your bookkeeping. If you've got the ability to unmute. John, how about you? I know you, but you can tell us where you're from and where you are in your bookkeeping. Anything particular you want to learn today about the chart of accounts?
Sure. Well, no, you are your depth of knowledge is such. I sometimes just listen to pick up on small things, but I'll tell you where we are. We have brought all of our bookkeeping in-house, which has saved us tremendous amounts of money with the oversight of HR Biz. And what I mean by that is we have, an account representative, because, at least once a month, there's something that I have a question on. And so it's been this fascinating combination of teaching me and realizing that some of this is quite easy, but then having the expertise to fall back upon. And so where we are with regard to chart of accounts and bookkeeping is what got me on this thing was the cleanup. This chart of accounts is just all over the place. And, if it's possible to clean it up, if it's possible to take out things that have no relevance that are from 1998, et cetera. And that's not an exaggeration to make a point. So that's my clip.
Yeah, I know. And we do the books for so many nonprofits, and I failed to properly introduce myself, but Amy did a little bit. I own HR Business Solutions, and we do human resource consulting and bookkeeping consulting, and pretty much just in QuickBooks. So we do a lot of nonprofits in Chattanooga and a couple in other states as well. So we see a lot of the nonprofits who've been around for a long time, like think of Humane Society, or the theater center, places that have been around for a long time. They've gone through a lot of changes. So with your chart of accounts cleanup today, what we're going to talk about is what happens when you hide an account or delete an account or merge an account. Is it going to freak everybody out? And am I still going to have my reports? Your board wants reports a certain way. And sometimes as the director, you want the reports a certain way. And sometimes those are at odds with each other because you're like, well, I want it this way. And they're like, well, I want it this way. And then what happens over the years with your chart of accounts is you end up with these extra accounts that other people have decided in 1998 that they needed, and maybe you don't even do that program anymore. You've evolved, you've changed, that program's not there, or that bank account, or that loan, or that what your grant is not there anymore, and all these things are just hanging out on the chart of accounts. So what happens when you get this really giant chart of accounts is every time you go to enter something in QuickBooks, and those of you who've been working on QuickBooks will understand this, you're entering something, here comes an expense in from the bank feeds, and you click on it, and now you have this drop down menu of 500 expenses, and you're like, well, it could be here, or it could be under office. Well, no, it's a bank charge, but maybe oh, there's an NSF. Yeah, maybe it's an NSF fee. And then you end up with 5 different accounts that it could go in, and which one does it really go in? And does it matter at the end? Is somebody else, looking at it and saying, well, that's not the right bank, account, or the bank charge that it goes in. So we'll talk about that today. We'll look at some stuff. I do not have a sample company of a nonprofit file, so QuickBooks just doesn't have one for us. And of course, I don't want to open up one of my clients and show the world, all their all their horrible chart of accounts. So we will be working in a sample file today, and the sample file is just a regular for-profit, but it's just all we've got. So that's kind of what we're gonna do. So these are our QuickBooks professionals here at our little office over here in Red Bank, and we do training, one-on-one training, and we do coaching, and we do your books for you if you need it. But we love to fix things. So, all right, we're going to get started. I've got just a few PowerPoints, and then I'm just going to go straight into the live file, and we're going to talk about how to do things in a file, and you can follow with that. So your chart of accounts. Chart of accounts it's the heart of your nonprofit business, and you get to the chart of accounts by years and years of people saying, hey, I need this expense line categorized a certain way because I need to see it, or I need to see this group of expenses grouped a certain way. And that makes sense, right? Like payroll, you've got other, some people call it wages or employee cost, you can call them all kinds of things, but they all go to the same tax line. So wages, payroll, employee costs, employment costs, they're all going to a tax line on your 990 called wages. So you can call it whatever you want in the chart of accounts, but there's a tax line and a tax code that it maps to. And that's really what you have to keep the big picture in mind, because as a director, I think most of you are like directors, or maybe you're just managing the books, your job is twofold. You've got to make sure that the the board of directors, maybe the treasurer, whoever has the information they need to make decisions about your programs, about everything. You also need to make sure you have all the information in there in their proper accounts, so that when you're audited or when you do your 990, they are populating in the proper accounts, and your CPA doesn't have to go and start moving everything around. That's when it costs a lot of money, because they're like, well, that doesn't go here, that goes here, but somebody on the board wants it up here. But now that you give it to the CPA, they're like, that's not really part of employment, that goes over here. So we're going to talk about how you meet both those needs, how you get what you want, but you also don't mess the books up so bad that your 990 ends up costing you $7,000 because they've got to move everything around. So keep that in mind, the two goals there. Most likely your chart of accounts been dictated to you by the different board members or past directors or past programs that have happened. And sometimes it gets out of control. And if too many hands get in there and they don't really understand the goal of the chart of accounts, which is to create a budget and to have a budget that's acceptable to the board, and then to have a 990 that's acceptable to your, CPA. So, but there is hope. You can take control of your chart of accounts. So I'm going to tell you really quick how to hide something in the chart of accounts, and then we're going to go live to the file. So if you go to the chart of accounts in QuickBooks and you click on the little edit button to the right of the account that you no longer need, there's a little drop down menu and you can delete it, and it doesn't really delete it. Delete is a word that QuickBooks probably shouldn't use. It does not delete it. It simply hides it and inactivates it. Then you can go back and activate it at any time. So I like to hide things because then you don't accidentally click on them and put something in there that maybe hasn't had anything in it since 1998. It isn't a proper account that you're using right now, current account. So you can hide it, and then if somebody needs it in the future, they can always unhide it, So you can always come back later and do that. But we're going to go right now to a chart of accounts on a file. Let's see if I can move this. There we go. Move that over there. But can you guys see my my chart of accounts here?
I can.
Okay, good. It's funny because I was gonna make sure I was sharing the right screen here. Thank you for telling me that. So this is a chart of accounts for a sample company. It happens to be a landscaping company, which is about as far from a nonprofit as you can get. So this chart of account actually looks very simple compared to probably what yours looks like. You always start out at the top with these checking accounts. You'll have checking and savings accounts, and maybe you have some CDs, some investment accounts. Oftentimes your nonprofits will have accounts that they can't really touch. Those are the accounts that maybe have a building fund or something in it that you are obligated to keep there and keep it separate. And so you'll have a special account, for that. And that's usually for, restricted funds or something like that, or maybe endowments, things like that. So if you're a company that maybe gives out money to, scholarships every year, you'll have maybe a scholarship one that people will donate money to that's designated just for the scholarship, right? You have to hold it. Then when you pay out that scholarship, you simply pay the money out of that scholarship fund. And that's an easy way to account for things, right? It's in the account, people put it in, you don't use it for anything else but what it says it's going to be used for. And that's kind of nice. But if you're a company, if you're a nonprofit that has a lot of those restricted funds, that can get cumbersome. You don't need to have 40 bank accounts and then looking around the office for the right check that goes with that bank account. So there are other ways to categorize that and report that back to the board, or report it to, if there's another authority that's asking for that breakdown. There's another way to do that, and that's by classes. And we'll talk a little bit about that later. But right now, I bet most of you, if you're a larger nonprofit and have been around for a while, you probably have account numbers, and they would be over here on the left. So this company doesn't have account numbers because, to be honest, mostly nowadays, account numbers are kind of old fashioned, but nonprofits do need them because there are certain account numbers that the CPA, the 990 need to look for in order to categorize things properly. So account numbers are really just used for reporting or for your 990. Internally, you can have them if you want them, but it doesn't really, there's no mandate that you have them, and there's no mandate that they have to be this in this order. You have to have the 1000s. Generally, the 1000s are going to be your checking and savings and bank accounts, and then your assets and things like that. There's a standard way that it's done, but no one follows that. They just make up whatever numbers they want and they go all over the place. And so that makes it difficult for people to follow. If you've been in business for years and years, you've got bank accounts now that have numbers that maybe, or not bank accounts, but chart of accounts with numbers that maybe don't correspond to what their category is. So like anything in the 1000s is generally going to be an asset in general, not everybody, but that's how it's supposed to be. But over the years, people have just added stuff and they don't know. So they're just creating all these numbers. So say they created a number that was a 2000 number in a chart of account. Well, the person doing your 990 knows that 2000s are cost of goods. And so now you've got something labeled that's going to confuse the CPA, and they have to go back and, because when a CPA does a 990 in general, they've got a system, and it says, they put all the account numbers in there and it feeds out the 990. And if your account numbers don't correspond to what they're supposed to correspond to, they got to go fix them. And so in general, the CPA will be fixing your numbers as they review your account so that everybody's on the same page. But if you don't have numbers and you want numbers, or if you have numbers on there and you're like, I don't need these, I'm a small nonprofit, they're just confusing me, you can go to this gear icon up in the upper right hand corner, and you would go to your account and settings. And over here is where you would turn account numbers on or off. And it's down here in the advanced settings. I believe it's down here in the advanced settings. And let's see, it's going to be enable account numbers. So if you click this little edit button over here, I can turn this little thing on and it'll say account numbers. And then I can say show account numbers, and then I can click save. And now when I go back to my chart of accounts, if I had any account numbers, they would be there. In this account, there are no numbers. Let's see if it populates a few. It doesn't populate any, but if there were any, they would populate straight over here. And how you give something a number is you're going to edit. So anytime you want to edit this chart of accounts, like you're like, I don't like the name of this. And this is one of my things about a banking and checking accounts. It's so much easier if you put the last 4 digits of your bank or savings account on the end of this. So we would do dash, 4477. And that helps me when you're in the banking feeds and you're moving money around, because if nonprofits, you're often moving money around, you can say, oh, it'll say in the bank feeds, transferred to bank account 4477. And you can be like, there it is right there. You don't have to stop and say, well, this says checking, this is Millennial Bank, this is First Tennessee. I don't know what the last 4 digits are. So you would do it right there. And then to do a number, whoops, I must not have turned the numbers on. I apologize. I must not have clicked save on it because I don't see enable numbers on. And I didn't click the save button. Oh, it says, I'm going to click save anyway. I'm in a sample file and perhaps it's not letting me save it. Yeah, I'm sorry, it's not letting me save it. One of the things it's just not letting me do, I'm getting this message there. So I can't show you exactly how to do the account numbers, but if you are, there's a little, when you turn account numbers on, there's a little box here and it says account number, and you write 1000 or 1001, whatever it is that you want to do. So you could do that as well. I'm sorry, I can't demonstrate that, but that's just the way it is today. So going through my chart of accounts, if I were you and you were like, I want to make my chart of accounts like really efficient and the best it can be, you would go through those bank accounts and you would put the last 4 digits on these, And that would help you in your bank feeds. So the whole goal of the chart of accounts is also to keep these names kind of short, because when you're moving around in QuickBooks, you're creating a check, you're making a deposit, you're grabbing stuff in the bank feeds. There's a limited number of characters that you can see, right? I think in any given place, it might be different, but it's generally between 20 and 25 characters that you can see. And if you've got big, long names on things and subaccounts of subaccounts of subaccounts, you're not going to be able to see it quickly in your drop-down menus. You're going to have to search for it and expand it. And that takes time to do that. So one of my things about the chart of accounts that I try to help people do is I help to keep those chart of account names as short as possible. If you can truncate them a little bit, that would be great. If you can abbreviate it a little bit, that would be helpful too, because big long names are going to be hard to read. And I'll show you an example of that as well. So in your chart of accounts, you've got your bank accounts up here, and then you're always going to have an accounts receivable. You may have several accounts receivable if you have different areas where you need to track your accounts receivable. You may have inventory assets. If you're not selling anything, generally you're not going to have inventory. You're just going to have regular old assets, you know. Your prepaid expenses, that just means something that you have paid in advance, but you don't need it to hit the books yet. You don't need it to be recorded yet because you prepaid it. Sometimes people might prepay their rent or prepay something maybe in 2020 in one fiscal year, and then but they want the payment to be recorded in the following year, but they want to go ahead and get it in there, but the payment will hit the books on the following year. So this is an asset. It just means, hey, I paid this, but it hasn't hit the expense line yet. So that's what prepaid expenses are. And generally don't use those a lot, but there may be some instances where you need to use that. Generally used if you're doing something from one fiscal year to another fiscal year. Any questions about prepaid assets or your checking accounts or how we're doing that so far? Feel free to ask. All right.
No questions so far in the chat, Lynn.
Okay, well, I'm going fast, so I'll just keep on going, rock and roll. All right. Uncategorized asset. This is like an account that you cannot delete. It is created by QuickBooks, and QuickBooks will insist that it always stay there. You can go over here and delete it, and the next time you update your chart of accounts or you click on the refresh button, it will show back up. So you can't get rid of that. There's a couple of accounts like that in QuickBooks. So the uncategorized asset is there in case there's something going on in the bank feeds that QuickBooks can't find. Usually what happens, and some of you who've been in your books doing some details will verify, yes, I've seen this happen before, and now I know, why. So if you're transferring money, and all nonprofits have got, you're transferring money into your, payroll account, you're transferring it back and forth from different accounts. When you transfer something and QuickBooks in the bank feeds and QuickBooks can't see that other account, in other words, it says transfer money, and you're like, oh, I can't find that account. I don't know where the money got transferred from. If QuickBooks can't find it, in other words, if that particular account isn't synced with QuickBooks, it doesn't find it anywhere. So perhaps you transferred it to a fund that isn't synced with QuickBooks, and QuickBooks can't find it. It will slap it in this uncategorized asset. It said, I can't find it. I don't know where it is. I'm going to create an uncategorized asset and I'm going to put it there. And if you're in the bank feeds and you're accepting the transfers and you're not paying close attention, you might have something in this account. So when I go to audit a file, or when I'm working with nonprofits for the very first time, this is one of the first places I go to. And if there's anything in here, it's generally been populated by QuickBooks on the online event that somebody just clicked on, and it needs to be moved to the proper place. And so this generally should be 0 unless you really, really do have an asset that you haven't created yet. Because if you have an asset or a bank account, you need to go up here and create it and move whatever's there into the proper bank account, right? Does that make sense? So that's uncategorized asset. It should be 0. Undeposited funds. This is the other account that QuickBooks creates. And you guys, if you've been working on it, already know about this, the good and the bad with undeposited funds. Undeposited funds just means that when you accept a payment, A lot of nonprofits do accept payments. Others just put it straight to a deposit and straight to the income account that it's coming into. But some people do accept payments. And if you've sent an invoice out to someone, maybe they're on an annual, annual fee or something that they pay, and you accept a payment against that invoice, that payment doesn't go straight to the bank to get deposited. That payment is held in this little thing called undeposited funds. So for this client here, he has a few people that have either written him checks or paid by credit card. Somehow there's a payment here and he hasn't quite gotten to the bank yet. So undeposited funds, I tell people to think about this as your little bank bag. And it's the money that you've got, but you just haven't quite gotten to the bank yet with it, or it's been accepted on a credit card. It'll hit your bank tomorrow. And so that's what that is. And there could be money in there, or there could not be. But I always tell people to look at it and see, are there some things in there that maybe you received, but we forgot to match it up to a deposit, and we can clean those out and put them where they need to go. They need to eventually go into the bank account, but sometimes people will accept the bank account. They'll create the invoice and then just make the deposit, and they sort of forget about that payment part. And that's why this undeposited funds can sometimes build up, but that's what that is. And again, your next ones are all going to be assets here, and see how they're categorized. This is the type of it. This is the type, and this means the type of chart of accounts that corresponds to your company. So if you're a nonprofit, your types may look a little bit different than this. This is an S Corp. So these are the line items for the tax return for that S Corp. Yours may say things like restricted funds or assets, things like that. And you would go through. So let's just look at one. If I'm going to do a truck, I'm going to just edit this truck, and I'll show you how you change that. So again, this detail type here is the tax line, or this account type is one of the tax lines here. And you can only have an account that's like an asset, a liability, an income and expense, or cost of goods, right? The long-term, short-term liabilities, that's all you can have. So this one is a fixed asset. And then the detail type is the one that matches your tax line, which is your 990. So for this one, these we have to choose somewhere. And since this is a truck, we went down and chose vehicle. We could do other assets, but it's nice to go ahead and categorize it where it needs to go on the 990, which is a vehicle. If it's a car, call it a car. If it's land, it's land. If it's intangible, it is. But we'll do the vehicle right here. And now I know when my 990 is moved from QuickBooks to whatever tax thing your CPA has, it's going to go over on the right line. It's going to go over as vehicle. And then often you'll have a number right here. So we could say this is a number, 2000. And then, so my numbers have come up here. I don't know why. We've got a number here, 2000, and your CPA will also have that number indicated that that's 2000 is vehicles. Now your number might be 8,000. Your number might be 7294, but this is just what I'm giving it here. So we're going to save and close. And then let's see if that truck, it did not, the number did not come up. I thought maybe it would come up over here. So this truck, so all of your assets that you have are, going to be depreciated, right? So every asset should have a depreciation attached to it. Now that might be lumped together. If you've got a big office and you've got all kinds of desks and computers and all that stuff, it might just be furniture and equipment, $10,000. And then your CPA will give you the depreciation for that every year. Depreciation has different, there's different depreciation schedules for different asset items. And that's why it's important to check which one it is, because a vehicle generally is going to have a 5-year depreciation. They're just going to straight line it over 5 years, but furniture and equipment may have less. So you're going to want to label it properly. And for this particular one, they do the original cost. This is the day they bought the vehicle. They bought it for $13,000. Maybe they just bought it this year. There's no depreciation yet. And then this is the total amount of the truck. So some people will do that original cost as well. Generally, you're just going to have, if you have more than one vehicle, you're going to say, vehicles, and you're going to have, the van and the car and whatever. And then your depreciation will just be all lumped together under vehicles. So you'll have that. And if you have other assets like furniture and equipment, let's just say we need to create another asset because we have furniture and equipment and maybe we just bought one. I click the new button and the account is going to be a fixed asset. And then we're talking about furniture and fixtures. So I need to do this detail type and I'm going to drop it down and I'm going to look for furniture and fixtures. And again, whatever yours is, and we'll call it furniture and fixtures. And if you want to give it a number, 1010, or I guess it'd be 2020, 2010, and save and close. Now I have another furniture and fixture assets. Of course, I don't have anything in here, but maybe I just bought something and I can now put it in here and the CPA will be able to look at it and say, oh, you've got more assets. I need to create a depreciation schedule for that. And they'll be able to do that. So any questions about assets and depreciation? You'll probably have some other type of assets too. If you have some general funds or different things, grants, things like that have come in that are just sitting there waiting to be used, you may have some other assets as well. Accounts payable is pretty obvious. That's just when you've queued up some bills to pay and they just haven't been paid yet. You've got them queued up. Maybe they're due next week. And for this company, they've got 1602 due probably in the next few weeks. So that's an accounts payable. And a credit card similar to accounts payable. It's just a short-term liability. It's money that you pulled out on a credit card and you're going to pay it off, very soon. And this company has 2 credit cards. That's fine. You might have several. You might have a PPP loan. You might have other liabilities. This particular company has some sales tax liabilities. You probably won't have that, but you might have some loans or notes payable. All of those would just be current or long-term liabilities. Okay, so a current liability is generally anything that's due within a year. So sales tax, if you collected it, or payroll tax, or if you were withholding healthcare, Blue Cross Blue Shield, all of those are due pretty much the next month. Those are going to be current liabilities. Some people call them short-term liabilities. Anything that's due after a year is going to be a long-term liability. So like your PPP loan or any kind of loan, that's going to be a long-term liability. And if you were here and let's just say this note's payable, we're going to edit this note's payable. And we're like, look, this note's payable, we're going to pay it off tomorrow or next week, or I don't know. We could change it to current liability. And that would mean for the CPA, that's due within the next 12 months. So you can always change it if you go to your chart of accounts and you're like, well, wait a minute, we have our stuff under long-term and it's really current. Just go change it. It's not a big deal. It's not going to hurt anything with your CPA. It's actually going to correct it and make it better. And then of course there's a drop down here that says this is a notes payable. You're not going to have shareholder because you're a nonprofit. So you may have some other options in here as a nonprofit as well. And you would just choose which one it is. And again, if you didn't know, you could choose one and you could pop a note to your CPA or your bookkeeper and say, what is this? Is this a notes payable or a long-term liability? Like which is the best? If it's a bank note, then it's a notes payable. That's kind of the way it goes. All right, so right now I've gone through those, and then you're not going to have equity. Equity in a nonprofit is generally just not. You're not going to have anything, or it's just a wash account that things come out to, because you don't have a investment type thing in your account, or a person that owns it that's investing in it. So this equity just kind of washes, and I think it's called something else on your nonprofit. And here are the income accounts. I see in a lot of nonprofits, I will sometimes see over 100, 150 income accounts, and you really just don't need all of that. So if you've got, generally for income, you're going to have donations. You can specify those as corporate donations or individual donations. And then you're going to have designated funds or programs. Maybe you've got, I'm trying to think of 3 or 4 different kind of income income accounts you might have. And then if people are making donations, that's great. Let's say you have a golf tournament, and you're going to go up here and create golf tournament income. And I'll see people create like golf tournament income 2004, golf tournament income 2005, golf tournament income. And that's like ridiculous. Like, you just need one. And then when you run your report for the year, that's where your golf income is going to be. You're going to run it for 2020 or your fiscal year. You can run it and compare it to last year, and you'll see golf income from 2021 and golf income from 2020. So you don't need a chart of accounts that has it listed every single year. So you would just have one. And sometimes you can even do, if you have, say you have 3 fundraisers in a year, you have a golf income, you have a run, some kind of fun run, and then you have a spaghetti dinner. So you've got 3 fundraisers. You can also, if you wanted to make it really get your chart of accounts down tight, you would have a chart of accounts income that just said fundraising income. Then you would class the income that comes in to those 3 different events. So you would have one income line that says fundraiser income, and then underneath it, not even underneath it, but in the class section, which I'm going to show you how to do the class section, you would classify it as golf or spaghetti dinner or the fun run. And that keeps your chart of accounts really, really trimmed down some. Now, some people will say, well, I need to see how much I made. I need to see how, well, you just run a report, a profit and loss, or an income, income by fundraiser. And then you can see it by fundraiser. And that's really nice. So there's an easy way to do that. But some people just, it's harder for them to understand that because they're just used to seeing it in the chart of accounts. So it depends on what kind of reports you need and as to how your chart of accounts is set up. So let's do one here. Let's see this landscaping services. They've got job materials. They've got all these different kinds of incomes here. And we're just going to pretend that these are different fundraisers that you have. I'm just going to edit this real quick, and I'm going to call it fundraisers so that we can go back and find it. So we'll just pretend that these are fundraisers. These little income accounts under here are different fundraisers, decks and patios, fountains and garden lights. So we can run different classes. So what we could do here is I'm going to show you where you're going to do classes, because you may or may not have them turned on. Most nonprofits have them turned on, but let's go to the accountant settings, and again under advanced, and we've got the class tracking. See how it's turned off? We're going to edit it, and we're going to turn the class tracking on. And I'm going to click this button that says warn me when a transaction isn't assigned a class, just for now for the demonstration, so you can see what QuickBooks does when you accept something and you didn't tell it which program it went for. So we're going to say okay. Now it's turned on. And when I go to the bank feeds here, right here to the bank feeds, and I'm going to accept something, we're just going to pretend. So we're going to pretend that some of these checks that came in, these, let's do oh, they've matched all these deposits already for me, so I can't do that. Fine. We'll have to do this one. This is not a good example because this looks like he rented some equipment and got his deposit back. But we're going to open this up, and we're going to put it in the fundraising income, right? Fundraising income. And then we're going to select a class. Now I haven't entered the classes yet, but it's going to let me create one here on the fly. I'm going to call this golf tourney. We'll just call it like golf tournament. How about that? And then you get this little thing like you'd always do in QuickBooks when you're trying to add something and it's not there. And it says, do you want me to add it? I'm going to click the add button, and it's going to say you're creating a new class called golf tourney. And I'm like, yes, that's right. And then I'm going to save and add it. And it's $200 is going to go into the fundraising, and it's going to be classified to the golf tournament. And I can also just create a check here too. I can just, like I'm just creating a check if I was going to write something, and I could write a check to, I could write a check for, and of course I'm not going to have fundraising expenses, but we're going to put it in, that's not going to work. I was going to say, if I had, your category would generally be like program cost or fundraising expenses, because when you fundraise, you still have expenses that go with it. And so you would have a category, you know, called fundraising expenses or program expenses. And then you're going to class it to, and when I drop down, the golf tournament. So let's just say I had to go pay, you know, Signal Mountain Golf and Country Club, you know, $1,000. We would write a check to them and we would put it in the fundraising category, and then the cost would be classed to that golf tournament. And so let me just go ahead and put, I'm just going to put like miscellaneous expense so we can just get it in there. And then we're going to do, let's just say golf, yeah, country club. And then we know that's what that is. I'm just going to add that as a vendor. Again, add as a vendor, save. And what's the date there? 5/19, save and close, $1,000. Save and close. So what this does is I'm creating an expense and an income, but I don't necessarily have to say golf tournament expense, golf tournament income. I can just say program or fundraiser income, fundraiser expense, run the profit and loss by class, and let's see what's in there. And in your books, you would have lots of little things. You might have signs going in, you might have little gifts you're buying for people. Then you're going to have everybody paying you, you know, $400 for their golf tournament. And you'll have lots of information in here. But in this example, I'm not going to have a lot. I'm just going to have the two that I did in there. So we're going to run a profit and loss, and we're going to run it by class. So we're going to run the profit and loss. See how it says display columns by? If you go down here and just say class and select a period, I'm just going to do this current year because that's what we've got. And we're going to run the report, and we're going to see what comes up. And as I suspected, everything is not specified because this is a sample file. But here are the things that I found. This is $200 deposit somebody gave us. And then if you scroll down, we should be able to see the $1,000 of miscellaneous expense. So just today, we have -800 in here. But if you were really doing this, you would have lots of money in this fundraiser here. But when you run just a regular profit and loss, so if we just run it total only and run the report, you're just going to see fundraiser, and you're going to say, well, what fundraiser is that? You just simply go up, touch this button for classes, run the report, and then you'll say, oh, that's for the golf tournament. Now, if I had 10 classes, I would have 10, columns here, and you would know exactly how much money you had. So if you're like for Humane Society, what we do there, they have lots of fundraisers, but they also have programs that they do when they spay and neuter animals, or they have adoption fees, and we're able to run a profit and loss by each of those as well. Just gives you further information. So this is a report that somebody on your board is running the golf tournament and they want to see this number, we'll run this number for them, but you could run it by classes. Any questions about that? I know that's kind of a lot right there. So, all right, so I'm trying to think of what else we need to do. How to merge two accounts. I'm going to go back to the chart of accounts. I'm going to show you how to merge two accounts. I've got some numbers here, so the chart of accounts is starting to populate numbers. Yay, I'm glad for that. I created a couple accounts that were, could be like duplicated, and they're called bank charges. So if you're looking at your chart of accounts and you're like, oh my gosh, Lynn, I have all this stuff. I have bank fees, I have bank charges, and I have bank NSF fees. And really, in the real world, these are okay to collapse into one. So you're gonna look at the one that you want to keep. So let's say we want to keep this one, bank charges. I want this to be my real account. But this bank fees and charges has a few things in it, and I want it to move over here. So what we're going to do is we're going to edit this account, the one that we don't want anymore, and we're going to change the name to the exact same thing that the other one has that we want to keep. And so I think it says bank charges. It's a little bit behind here. I can't see it, but I think it says bank charges. And we're going to click save, and we're going to see what happens. You're going to get this nice little confirmation that says, hey, this name is already being used. Would you like to merge them? Now, very important, you can't unmerge once you've merged. So if it's just something simple like a couple of bank fees, this is really easy. But if you're merging something that has historical information for many, many years that you may not want to do, you may want to stop at this point and go re-look at it and see. When I click yes, it simply goes away. We'll go back down here to the expense accounts and we'll look at the bank charges. So you can see I don't have the bank fees and charges. Now I have another one here called bank NSF fees. Maybe that's just when we, bounced a check or somebody bounced a check to us or something. But notice how it is an expense, but notice the detail types aren't the same. This one got categorized under bank charges, which is the proper tax line. And this one just got under other business expense because somebody a long time ago thought that's where it went. Now, you can't merge these accounts unless the detail types are the same. So the first thing I have to do is edit this NSF fees because I want it to go away. I'm going to edit it and I'm going to change this to bank charges. Sorry, bank charges, save and close. Now that I've changed it to the bank charges, go back up here and look. Now they're the same and now I can combine them. So I could just go and hide this one. I could make it active and delete it, but I really don't want to run a profit and loss comparison for last year and have 3 NSF fees show up in an account called deleted and the CPA is going to say, why did you delete that? It's not really deleted. It's still there. So if you really want to move them into this account and just have one that's called bank charges, you would simply edit it and you would just change it back to that name again, CHARGES, CHA. There we go. And we're going to save and close, and we're going to get that little message again. And if we like it, we can hit save. So that's how you merge 2 accounts that you're looking at in your chart of accounts. And like these are the same. People are just calling them different, or somehow they've gotten spread out. Sometimes people will have lots of sub accounts that maybe they don't need anymore. Like maybe they can say, fountains and gardening lighting and, sprinklers and drip systems. I don't need to know that. I don't need to know the difference. I don't really care. I haven't had anyone ever ask me to separate those income accounts out or expenses out, whatever you're looking at. And if nobody is asking you for that and nobody on the board is asking, maybe it was somebody a long time ago, or maybe it was a big deal a long time ago and now it's not, you can merge those accounts. So it's just a matter of talking with your board and talking with your CPA if there's a relevance in these. And if not, you can merge sub accounts just so they have the same detail type and the parent account has the same detail type too. You could simply just open this up, rename it to sprinklers and drip system, save and close, and it would just merge them both. And that's just sort of collapsing your chart of accounts down a little bit. But if you don't want to do that for whatever reason, maybe historically somebody needs to see that separated, but you don't do this thing anymore. And in this case, it's sprinklers and drip systems. You're like, we don't do that. We stopped doing that years ago. I don't want to merge it with anything else. I just want to get rid of it. I don't want to see it. You just simply click this make inactive and that reduces, are you sure you want to inactivate it? And remember, it's called sprinklers and drip system. So when we go down to the income account, it's gone. And then somebody comes along and says, Lynn, what did you do? I need that account. You can go up here to this gear icon. See this little button that says include inactive? You can just simply click that. And when you click the gear icon again, that will go away and we'll scroll down and there it is with the little word deleted beside it. And again, it's not deleted, it's just inactivated. And QuickBooks is helping you right here to saying, hey, did you want to make that active again? Because that's about the only thing you can do with this, make it active or run a report. So you can click make it active. And if you make it active, it magically appears. So it's that simple. It is that simple. You can inactivate it, activate it all day long. So you can go through the chart of accounts and inactivate the ones you think really have not been used since 98, just inactivate them. And then if you need it or later on you decide you want to merge it, you can simply merge it. That would be fine. A good idea is to inactivate it because you can always go back, you know, and grab it. So all right, well, that's pretty much all that I have for today. And I know we've had a lot of people drop off, but is there any questions? Catherine, do you have any questions, or Amy, about kind of how to help manage that chart of accounts that's gotten out of control?
Yeah, Lynn, we actually have some questions from Miss Kate, who she submitted a few in the chat that she thought would be best to say for the end. So it looks like, and Kate, feel free to jump on. I'm going to ask you to unmute so that you can ask Miss Lynn, so I don't muddy your questions for you.
Okay. Sure, let me see. Well, one of them is just about PPP. If, you know, it's listed as a liability, so once it's forgiven in QuickBooks, are you just moving it into the revenue? You're just going in and
Yes.
changing that?
Yeah, that's a good question. And several CPAs have a little bit different ways of doing it, but 95% of our CPAs are telling us to move that to other income because it's not taxable, not necessarily taxable. And that shows up at the bottom of your profit and loss, other income, and you label it. You call it PPP Forgiven Loan 2020. Tell it what it is. And then that other income, your CPA will be able to see it and say, okay, that's not taxable. Because otherwise, and I know nonprofit's not taxable either way, but it is treated a little bit differently. So yes, I call it what it is.
Awesome.
And if you've gotten a grant, same thing, Tennessee grant, forgiven, you know.
Okay, great, thank you. Let's see, I have to go back to my notes. Oh, how do you handle on your chart of accounts pledge donations? Do you treat them as, yeah, just how do you handle those? Because just like they're not quite received yet, they've been pledged to make that commitment. How are you classifying that?
Well, again, there's different ways to do that. And depending on how your organization has set it up, there may be a pledge is something a little bit different than, you know, most companies don't have those. And you have to be careful with the word pledge, because in the terms of the IRS and the 990, a pledge is considered income, even if you haven't gotten it yet. You know, so if you pledge, if you have a formal pledge system in your nonprofit, that money has to hit the income line, even though you hadn't gotten it yet. So it would be like an invoice, or I mean, I'm assuming you're sending like an invoice and it says, you know, Lynn's Talbot's, you know, annual pledge, $100, something like that. That would hit the income line, because nonprofits are generally going to be on accrual, and that invoice is going to be counted as income, even if it's not paid. So, but there's a couple different ways to do it. You could create a separate income account for it that just says pledge income, you know, hadn't happened yet, you know.
Right.
Yeah, hadn't happened yet. But all of those invoices are going to hit that line. And then when they're paid, you can either choose to move them to whatever annual, you know, whatever income you have, or you can just leave it there and it'll be pledge income. But your CPA, I would definitely talk to your auditor about how to categorize it, because each charter for nonprofits has special ways to set those up, and it would depend on what your charter says. It would come down to, what's the definition of a pledge in your organization? Is it true, or is it just not, you know? So sorry, I can't answer that. It depends.
It depends. No, I thank you for your info. And then so I'm looking at the undeposited funds. So if you receive a multi-year grant, where you say you have a grant that's going to run over 2 years, and they go ahead and give you 2/3 of the entire grant, but you know that you're going to receive the final third in the last year. How does that go into the undeposited funds and split with deposited funds with the ones you're actually using this year?
Well, it's got to clear out of undeposited funds the second it's deposited. So it would never stay in undeposited funds. It would eventually get deposited. And so when you click on it to make the deposit, it just a matter of whether it goes to, you know, blah, blah, blah grant, or blah, 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 future grant, you know, but if they've paid it to you, even though the allocation is for a next fiscal year, you know, it's, I mean, it's going to have to go into the bank account. It's going to have to be counted somewhere. And it's just going to probably be in that grant, you know, grants received a category or whatever like that. It just means that you know that you're not really supposed to use part of that until next year, you know.
Correct.
And you can allocate that. I've seen some people do, and this is kind of cool too, just because if you've got a lot going on and you're like, I'm so afraid I'm going to forget the parameters of this grant because I've got 15 grants in here. You know, I've seen people do a subcategory and they'll say, okay, I've got this $100,000 grant, and then the subcategory would be $30,000 grant for 2022. And they'll just put it there so that they'll know that, yes, there's $100,000 in this account and I have it, but 30 is kind of reserved for next year, just so you don't forget to use it. And then when you start to use those expenses, you're going to tag back to the top one, and you're not going to tag that 30,000 yet until 2022 hits. I've seen it done like that as well. If that helps you, it's just kind of like a reminder, a sub account. And it's weird to have a sub account of a bank account, but it's just a sub account that says, hey, I just need to hold these just for something special, you know.
Exactly. It's like, how do I, but that's very helpful, Lynn. Thank you.
Yeah, just those are just some tips and tricks. You know, there's just so many tips and tricks you can use. And with a nonprofit, if I had been able to download a true nonprofit, you would see all those little funny things going on in there. And there are a lot of different ways to do things. And I see them, every nonprofit does it different. So it just depends on, you know, I always go back to the auditor and how they need it reported. And then I'll try to report it that way in our chart of accounts, so we don't get them off, you know, they don't get them off kilter there.
Awesome. Great.
All right. Anything else?
Sorry about that. I got kicked off, so I thank goodness I had my backup device. Did Kate's questions get answered?
Yes, we were talking about that, so it got answered, and I think we're kind of wrapped up for now. So I appreciate everybody looking, and you know, for your nonprofit, you know, chart of accounts, you can always talk to your auditor and ask how you can do it better or how you can make it simpler. And your treasurer may or may not, you know, be familiar with it, but I always say go back to your treasurer and your auditor, and then sometimes your particular nonprofit may have parameters set out in their charter that tell you things have to be categorized or put in a certain way. And of course, you'd want to be able to go by those as well. But most of the small nonprofits, you can kind of do the books. You can kind of keep it simple and not have to make it complicated. That would be my goal.
It's definitely mine.
Okay.
Yes, keep it simple. All right. Well, it's been great. Anything else you have to add, Amy, before we sign off?
No, just it's recorded, and if anybody wants to catch it on our YouTube page, and I think it should be on our Facebook page for at least today, since we went live. So yeah, if you've got any questions or concerns, share her contact information more, but if you need to reach out to me, I'm just amy@artsbuild.com. So thanks so much, everybody, and we will end it there. Okay.
All right.
Great. Thank you, Amy.
Okay.
Thank you, Lynn.
You're welcome.
Bye.